Every single purchase you make, every job you hold, and every dream you fund rests on an invisible machine. This machine, built on trust and debt, can create vast empires or bring families to their knees. Fast, stylized montage of a skyscraper, a farm field, a credit card swipe, and a person checking a bank balance. We call it money and credit. But what happens when the very foundation of this financial world begins to crack? Context in one breath. This story is about a simple idea that became the single most complex system on Earth: how humans exchange value. Money, which began as mere shell or salt, evolved into digital information, shaping the fate of nations from Washington, D.C. to rural villages in India. It is the story of two inseparable forces, money and credit, and how their delicate balance determines poverty and prosperity, everywhere, for everyone. This story matters now because the rules of this system are changing faster than ever, driven by new technology and staggering global debt, leaving those who don't understand it vulnerable. Timeline of key events. Human commerce began with the barter system, an incredibly slow process that required a difficult double coincidence of wants. You had to want what I had, and I had to want what you had. Animated depiction of an ancient, struggling trade. Around 1200 BCE, simpler and more durable forms of money began to appear in the Mediterranean and East Asia, making trade universally efficient. This new money acted as a medium of exchange, meaning you could sell your goods and use the resulting money to buy anything from anyone else. The shift to metallic coinage around the 7th century BCE in Lydia gave money a standardized and durable value. This innovation allowed wealth to be reliably stored, establishing money's second key function, a store of value. For centuries, the true value of money was tied directly to the gold or silver it contained. The greatest financial revolution came in the 17th century with the creation of the first modern banks and the shift toward paper currency. Banks realized they did not need to keep all the gold in their vaults. They only needed a fraction to cover daily withdrawals. This fractional reserve system allowed banks to begin extending credit, creating money out of debt and funding vast projects like the Industrial Revolution. Engraving of the Bank of England opening. Credit became the powerful engine for economic growth, lending money against a promise of future repayment. In the 20th century, the system changed forever when most major currencies abandoned the gold standard.